Hi, I'm Steve Miller. Call me Slim. You probably heard last week all the news about the junk bond market. Been under a severe amount of pressure, some liquidation going on there, as those high yield instruments are a lot of concern to a lot of holders. Last week in our Tools for Tech segments, I did a correlations piece that looked at the junk bond market and compared that historically to the oil market. And of course, there are a lot of oil stocks that are, well, smaller companies that are in that classification of having junk bonds, and compared that also to the stock market. There could be some danger out there, and I thought this was worth looking at. So I thought I would share it with everybody, even though it's a member segment. I think you will find this very valuable. It's highly technical, looking at charts, and you'll learn a lot about how I look at charts and the type of cyclical analysis that I do. Have any questions or comments? Send those to slim@askslim.com. I hope you enjoy this. Tools for Techs, correlations, junk bonds, oil, and stocks. All right, this is something that I kind of touched on briefly back some months ago when I was looking at the junk bond market and looked at some correlations as to how the stock market acts versus the junk bond market. Recently, there was a CNN article that I had read that discussed potential wave of defaults, a huge percentage of listed companies that are in the junk bond market that have a lot of risk, and a lot of that has to do with the oil price, of course, as oil has gotten very, very low down here now, trading in the 36s, and that puts a lot of pressure on a lot of these oil companies. Recently, this week, did a piece on the major oil companies, looked at 20 of them, and saw that it wasn't likely that we had come to a point where we've seen the lows yet. So as I started to review this scenario about junk bonds and the issue of a lot of these companies that potentially can default, I wanted to look at how junk bonds compare to oil and how junk bonds compare to the stock market. And that's what we're going to do here in this segment. An example they gave was like Chesapeake. Now Chesapeake's a stock that I've been really negative on for this whole last year, and it was really about the fact that, well, they had to raise a lot of money, they were real short of cash, oil price going down really hurting them, and they had some $11 billion in debt. That's huge for that company, as CNN mentions in that article, and there are many companies in that condition. So what we want to do now is we're going to look at junk bonds, we're going to compare that to light crude, we're going to compare that to the stock market and see what actually we're looking at here and what might be happening in these markets. So we'll start out by putting up the chart in junk bonds, JNK. We're going to look at a weekly chart, and I want you to see the kind of pressure that this particular market has been in for more than a year. You can see here as it's just been under relentless selling going on, and this week really actually accelerating again to the downside. You can see that here. This, for a market like this that's of course interest rate related, this kind of a move to the downside is very big and is very reflective of all the stress out there in this high yield category. In other words, companies that are very small companies that have to borrow a lot of money to run their businesses, stay afloat, and when their source of revenue like oil comes apart, then they get to be in a lot of trouble. So you can see there in that junk bond market that it is really coming apart, and that's reflective of serious issues out there. So what we want to do now is compare the junk bond market to the oil market and see how much they move together. So what I did was I put a chart up that is showing junk bonds and comparing that to light crude, and you're going to see a lot of similarity in movement in here. And now with the oil market collapsing from over 100 down into the area of 36, that has continued to put a ton of pressure. And you'll see that here in these charts. Now you'll notice colored phasing in here, and what I have are the cycles, and they're kind of big cycles that you can see, and you can see these cycle brackets are guides to the cycle patterns. Some of them are well aligned, some of them are not that well aligned, but you can still see the clarity in the cycle pattern. So this one right in here you can see is right in here, and then you can just follow them right here as the market rallied up and down and made these cycle patterns. Now let's look at this last cycle that we're in right now, and there's a breakdown underneath this level that turns this cycle phasing red and is in this big decline. And that big decline points to a low in the junk bond market sometime around late April 2016. So that is reflective of a lot of decline still potentially out there in the junk bond market. Now the junk bond chart is the candlestick chart here, and the this chart right here, the bar chart, is the chart of oil. So what I want you to see how closely these moved together. When junk bonds moved up, it was because, well, oil moved up. It takes the stress out of the junk bond market. But then when oil started to break in here, they got worried. That was way back in 2012, so they sold junk bonds. Here you could see oil breaking, junk bonds breaking, oil breaking here. Here you had a decline right here, but it didn't do a lot at that point. But you can see even these zigzags in here look a lot alike as they continue to follow each other. Then what happened in 2014, as the oil market peaked and started to roll over, you got this big decline in oil that you can see right here, from over 100 down to in the 36s, and the junk bond market just went straight down with it. Well, there was a bounce here in oil, you see that, and the bounce in junk bonds. That made this rally phase right in here, but now we're in this declining phase that goes way out into April. So my longer term pattern in oil is suggestive of a low coming in oil somewhere around June. So both of these are really pointing to a lot of stress still in these markets way out into late spring or so for the junk bond and oil markets. And you can see they are very, very strongly correlated, and it makes a lot of sense because oil price gets cheap, and then you have these stocks that are in this category of junk that end up getting under a lot of pressure and falling pretty significantly. So that's junk bonds versus oil. The next chart we're going to look at a little bit different is junk bonds versus the stock market. And we'll take a look in here, and it's a similar chart, but we're going to see how these correlations hold up and where the stock market is now in relationship to that correlation. So here is junk bonds. Again, junk bonds are the is the candlestick chart, and the stock market is the bar chart there. And you can see in here this cycle pattern. Look at this is the cycle pattern right here for junk bonds. It's almost perfectly reflective of the stock market. You can see that right in here, how they follow each other. This decline right in here, then this rally in here, and this decline. Pretty amazing, huh? So it's almost like this is the cycle pattern for the stock market, but it's actually the junk bond market. So you can see stocks and junk bonds really move a lot together. And, well, you know, part of the stock market is weighted by energies also, so that would be reflective, but that's, you know, only what, 15% of the market or less. So that's you can see how closely they are related. So I want to now zoom in on here and just look at these last couple of cycles. And here you can see that here, when they both bottom together right here very nicely, they both rallied together, the stock market and junk bond market, and they both sold off together right here. They both rallied together here and sold off together right here. But when the junk bond market had a little bit of a rally, the stock market got all the way back up to the highs. Here's where the low is due in April in junk bonds. What does that say to you about the stock market? Well, if junk bonds are going to be under pressure this whole period of time, the stock market in here looks like it's got very significant risk all the way out here into April. So based on my other charts that I look at in the stock market, this does correlate well. So what's missing? The stock market decline right in here. And boy, I bet that is coming when I see this chart and these very, very strong correlations between junk bonds and the stock market. So let's just quickly, we talked about this April period where junk bonds are likely to decline into, it would be this way as you're looking at me. Then let's take a look at these at the SPX, and we'll take a look at a 10-year chart and see how that coincides with what we're looking at here on the bigger cycle pattern. So we're going to look at a 10-year weekly chart, and on the bottom here will be those bigger cycle patterns that actually coincide very well with the junk bond market. And now you can see here on the bottom those big cycle patterns. Those are very close to the ones that have junk bonds. And now what we're going to do is just look at these last couple right in here, and what you can see is that this big alignment of declining cycles 1, 2, and 3 comes out into late March, just like we pointed at as April for the junk bonds. That says that this decline, you can see I have an ABC downward movement in here, that is showing a lot of risk for the stock market right now. Support, my guess, this 1800 area is a reasonable place to expect the S&P to come down to, if not even lower than that. You can see it stopped right there at the bottom of this cycle right there. When 3 cycles pointing down, you usually get a pretty sharp decline, and that's what we're moving into right now. That coincides with this very weak period in junk bonds, and says to me that, well, there is a ton of risk out there. So what we looked at was this correlation between junk bonds and oil, junk bonds being very weak, oil being very weak. There's the fact that, well, the stock market is pretty weighted with energies anyway, and that if you just isolate out the stock market versus junk bonds, that junk bonds, when they move to the downside, the stock market likely moves to the downside also. It looks like April for junk bonds, it looks like March for the stock market. And what does that say to me? That there is a lot of risk in stocks over these next several months, and we're likely to get some bounces in here. In fact, we're getting one right now with the S&P's up about $10 as I speak, but I don't think that those are going to last, and I think the risk is heavily to the downside. That just means protect portfolios, consider this analysis. I don't tell you that the market's going to crash. I don't recommend any specific trades. All I do is share the analysis and let you do what fits for you. That's it for Tools for Techs correlations for today. I hope you find it valuable. Let me know. Send me an email. And I'll see you in the next segment.